I'm back this morning with a calmer lens after a chaotic start and stripping away the noise. The message from the market is actually straightforward. We are sitting at clearly defined supply across the major indices. And at these locations, reactions matter more than opinions. This is not an environment that rewards anticipation. It rewards discipline, context, and patience. Yesterday delivered an important signal, particularly in the Nasdaq. Price push above a well-defined wedge structure, briefly explored higher prices, and then failed back below that level by the close. On its own, that kind of failure is not dramatic. In context, however, it matters. When price breaks from structure, finds supply, and cannot hold acceptance, it introduces hesitation into the tape. Not fear, not panic, hesitation. That distinction is important because it frames how risks should be approached today. This morning's risk tone reflects that hesitation. Indices are not breaking down aggressively, but they are also not accepting higher prices. That balance often produces chop, rotation, and false starts. Semiconductors are holding up better than expected. Small caps are pulling back into prior breakout areas, and defensive groups are not asserting leadership. That combination suggests digestion rather than distribution. Until that changes, forcing directional trades in the middle carries unnecessary risk. On the Nasdaq, the supply zone between roughly 25,803 and 25,850 remains the defining area. We failed there yesterday, and we are reacting there again today. As long as price remains below that band, upside attempts should be treated as vulnerable rather than trusted. For buyers to regain control, price needs to reclaim this zone cleanly and hold above it, with sustained acceptance rather than a brief push and immediate retreat. A failure to reclaim keeps the burden of proof on the upside and argues for restraint rather than chasing strength. The S&P is telling a similar story. The short-term uptrend from last week has broken, and price is now trading beneath a cluster of prior highs that rejected multiple times. This area has memory. If price rotates back into this zone and stalls or fails again, it opens the door for continuation lower toward prior demand. If, instead, price reclaims that zone and holds above it, the tone shifts quickly and risk conditions improve until one of those outcomes confirms. The space in between is low quality. The Dow deserves special attention. Structurally, it is weaker than the other indices. Below recent lows, there is relatively little in the way of defined support. That does not mean downside acceleration must occur, but it does mean that if those lows give way with acceptance, downside could travel faster simply due to the lack of structure. Conversely, if those lows hold and price stabilizes, the immediate downside risk is negated. The level matters more than the narrative. From a macro perspective, jobless claims were the near-term catalyst, but the more consensual data sits ahead tomorrow, markets often become indecisive ahead of higher impact releases, especially when already sitting at inflection points. That context reinforces the importance of patience and avoiding overcommitment before price resolves. On the equity side, relative strength remains selective. Amazon continues to respect a higher time frame level after bouncing from the daily 200. As long as that level holds, it remains one of the cleaner structure if the broader market stabilizes. Google shows similar behavior, holding above prior consolidation and pulling back in a controlled manner rather than distributing. These are examples of what constructive price action looks like if conditions improve. On the other side, weakness is also selective. Several high-profile names are failing with rather than trending cleanly lower. That lack of follow-through suggests continuation risk is still fragile and reinforces that this is not the tape that demands aggression. What matters next is simply and binary. Watch how price behaves as supply. Either these zones are reclaimed and accepted, or they continue to reject and rotate lower. Preparation today is about knowing which side of those levels you are willing to act on and which signals tell you to stay flat. There is no edge in prediction here. The edge comes from waiting for confirmation. For now, patience is the trade. Let price prove acceptance or rejection before committing risk. I'll be watching the same levels into the close and reassessing only after the market shows its hand.